Hi everyone, a very good afternoon. You're watching the newsroom on ET Now. I'm Mubina Kapasi. What are the markets up to, especially after we had a big Q coming in the form of the Fed? Well, we are in the red, 0.5% gone for the Nifty as we slip below that 11,600 mark that we saw very, very briefly in the earlier part of the day. And the SENSEX is now losing 240 points. So we've come off quite a bit. And now this is where we are trading at. Technology really is the only saving grace and is the only sector in the green. But interesting to note that that too has come off quite a bit from the day's high. But otherwise, today's key victims are metals and auto. Auto largely reversing the gains that we witnessed in yesterday's trading session. So let's flag off individually what are the big movers and shakers and keeping the Nifty as well as the broader markets busy in trade. Dr. Reddy's big pricing and volume action seen over there. In fact, the volumes over here are more than 13 times the last 20-day average, the trigger being that RDIF, which is the Russian sovereign wealth fund, and Dr. Reddy's are going to cooperate on clinical trials as well as the supply of the Sputnik 5 vaccine to India. Deliveries could potentially begin in late 2020, of course subject to completion of successful trials. This is something that's keeping Dr. Reddy's very, very active in today's trading session. Brokerage recommendation coming in for Dalmia Bharat, and that's the reason why this stock is buzzing. CLSA has maintained a buy. They are watching out for a target price of 1,010 rupees for the counter. They believe that ESG and growth are in focus for the company. Capacity ramp up is expected to drive growth, and they believe that at the current EV per ton of roughly $63, they see that the risk reward is pretty attractive. The other stock in focus is Dhanuka Agri-Tech. The key trigger behind this one's 5.7% rally is the company has announced that they will be mulling on a buyback. So this is something that's keeping the stock on everybody's radar. I remember that yesterday as well we had got the company on your channel to talk about the launch of some fungicides as well. The fact that the outlook for the Kharif crop sowing season as well is very positive, bodes well for the company. So by the way, the proposal for a buyback has already been approved. They will be buying back up to rupees 100 crores of their shares. Moving on, the other big mover is PVR, and a very somber note coming in over here from Goldman Sachs as they maintain a neutral and target at 1,350 rupees. Everybody's watching out for when the government will approve the reopening of theaters and multiplexes, but Goldman Sachs says that movie going is completely discretionary. The path to recovery, according to Goldman Sachs, may be more gradual, and in fact it's a long road to recovery. So a very sobering note coming in from Goldman Sachs. But JB Chemicals is really on a very, very strong ride this week. We have seen the stock move from roughly about 790 rupees, last Friday, or rather last Thursday, to now 1,052 rupees. That's 250 rupees a pop made in just the last 5 odd trading sessions. Massive momentum being witnessed here. But I guess most of the gains were seen from Monday onwards when they had delivered their Q1 numbers, and since then it's almost been like one upward journey for JB Chemicals, now at 1,051 rupees. So these are all the big movers and shakers today in trade. But from the debutante space, Happiest Minds is definitely facing some very, very happy times as the stock is off to a dream start on the Lal Street. The shares have listed at a massive 111% premium over the issue price, and this in fact has beat even DMart and IRCTC. We spoke to Ashok Soota, the Executive Chairman, and Venkatraman N, the Executive Director and CFO, to know more about the company on the day of their bumper listing. Listen in.
The people who helped to make the IPO successful, and that obviously includes our bankers, our legal counsel, our auditors, our board members, and of course, mostly our wonderful team to whom I'd like to dedicate this IPO. And now, in terms of how it feels, I do have one mixed feeling here, I must tell you. See, from the moment we've had this huge response, there's always this feeling of saying that they're going to be disappointed people who applied and didn't get their shares. And you can see this from social media comments, etc., of people who are disappointed. Second aspect is that it, of course, creates a responsibility on the teams to be able to deliver on the expectations that it creates. And to that extent, it's a challenge. And of course, it's a challenge which is something that we must look forward to and see how we move forward in our journey from here. You know, I should clarify and make a distinction between what you call as a broader IT services market and the digital part of the IT services market. So we as a company, when we say we are born digital, born agile, 97% of our business comes from digital. And the traditional IT market is growing much smaller, which is why we're able to grow at a faster rate, say a compounded of 20+%, as compared to about 8% to 10% for the larger IT players today. And I would imagine that when you said again that the IT services business is growing, yes, it is. The entire market, typically in slowdowns and recessions, and more so in this one, where everything is becoming virtual, then IT will definitely grow faster. Within that, the transformation towards digital will also get accelerated. So from that angle, I'd say we're in a nice spot.
Okay, well, moving on, yes, auto companies should become more efficient, reduce costs and reduce royalty payments, says Finance Minister Nirmala Sitharaman. And she also said that it's unfair to say that tax on Motown is high. Ruchi Bhatia joins in with the details. Ruchi, all of this coming in when the auto sector has been asking for a reduction in GST rates, but with statements like this, I guess we could put the hopes of a GST cut in the auto sector on the back burner for now.
Mubina, at the beginning, I must clarify these statements are not from the Finance Minister Nirmala Sitharaman. These are from the top sources in Finance Ministry. Of course, coming in after recently we had seen top automakers from the likes of Toyota to Maruti all speaking about high amount of taxation in the country. Having said that, Finance Ministry's clear message, or the top Finance Ministry officials' clear message to the auto industry is that you should look to reduce royalty payments. You should look to reduce royalty, the high royalty payouts that you make, reduce your costs instead of seeking tax cuts from Finance Ministry. In fact, top Finance Ministry sources telling us in ET now that there is complete certainty as far as the taxation is concerned, taxation policies are concerned, with respect to the auto sector, and it is the government is making sure that even after the goods and services tax was implemented, the incidence of GST or incidence of tax incidence on auto companies is much lower than what was initially under the VAT and excise regime. These clarifications, these important comments coming in from the ministry at a time where we see there is a lot of dissent within various quarters of the auto sector with respect to the tax rates on automobiles. So much so that top Finance Ministry sources telling us in ET now that this dissent is pretty surprising for them, and instead of asking the government to reduce taxes at this point of time, when the auto industry, when the government is anyway dealing with a tough environment due to low revenues, the auto sector instead, even though they have they are employing a lot of people, they contribute a lot in terms of manufacturing, they should look at reducing their royalty payments in a bid to cut down their costs and make the auto sector ensure that the auto sector flourishes a lot more. In fact, top government sources telling us in ET now that India is not the country with the highest amount of GST rates on automobiles. There are other countries, for example, in Japan, in EU, the tax incidence on automobiles is far higher. And even though the auto sector is dealing with the slowdown, they're also dealing with the COVID pandemic, one cannot take away from the fact that there are other reasons that are responsible for the slowdown in auto sector. It is not necessarily the fact that the auto sector has high taxes, that auto sector is reeling under a slowdown. Other sectors, other issues such as the NBFC crisis, the shift in consumer choices, the fact that millennials are shying away from owning vehicles, the focus on stringent pollution norms, mandatory BS6 compliances. These are the reasons for a slowdown in the auto sector. It is not the high tax incidents that automakers are complaining about.
Okay. This is sources, top sources in the finance ministry who have made these comments about the fact that, look, it's unfair to say that tax on Motown is high and the GST on cars, according to top sources in the finance ministry, does not seem to be a dampener at this point of time. So thanks, Ruchi, for bringing us all the latest. This definitely does not bode as the best of news for the auto sector, which, by the way, today is among the top losing sectors as well in trade. As 5paisa.com plans to raise funds via an issue of equities, we spoke to CEO Prakash Gagdani, who mentioned that the funds will be utilized in upgrading technology as well as customer additions. Listen in.
Right from the start, we have been a mobile app focused company. We are a completely app based company. If you see the exchange turnover in August, the mobile penetration was around almost 23%, which was one of the highest. We have always been like 70-75%, and now we are almost touching 80% plus. So if you see the tier 2, tier 3 guys, they are the ones who are young, have smartphone, have internet connectivity, and are now starting to earn and are smart enough to invest into a higher return kind of an asset class as compared to the traditional asset classes. Now, these are the people who are traditionally going to internet and searching for ways to invest and the best broker to invest. And that's where we fit in most. See, there are two sides of it. One is on the SIP side, there is obviously the growth has stagnated, but there is not a huge drop in the SIP inflows.
Welcome back. You're watching the newsroom on ET Now, and on to yet another ET Now exclusive. The Prime Minister's office chaired a high-level meeting earlier this week on the 15th of September, the topic being sugar reforms and boosting ethanol production. The Banking Secretary as well was a part of this meeting, along with the Petroleum Secretary and Food Secretary. So what kind of sweet pill is in the works? Let's go across to Karishma for more on this story. Karishma?
Well, it's a big news that's coming in. This month is important for the sugar industry, and what we are picking up is that PMO chaired a high-level meeting on Monday, that is the 15th, where there were important discussions and participation on sugar industry and pushing for ethanol production. In fact, what we are picking up is that government is likely to take a decision on reducing sugar exports by 20% year-on-year basis in order to reach a pact until 2024 where there should be negligible sugar exports from the country. Well, they're doing this in order to push the surplus sugar stocks towards ethanol production. It's exclusively we are picking up that that PMO has agreed and finalizes the tripartite agreement between OMCs, PSU banks and sugar industries, where ethanol distilleries could be set up through a escrow account. In fact, of about 350 projects that have already been approved by the ministries, by government, about 68 of them will receive will be sanctioned soon. In fact, an amount of these 3,500 crore is what we are picking up from our sources is being given to these 68 projects. Well, what I'm also picking up from my sources is that the government is trying to fast track this as soon as possible, and there is some kind of major announcement that's expected this right month. Discussions on this have been happening for last few months. In fact, for past 1 year, the tripartite agreement has been under discussions and the finalization stage has come.
All right. Thanks a lot, Karishma. Yes, it's certainly been an important week, an important month for the sugar industry. Let's bring on board Abhinash Verma, the DG for ISMA. He joins us now on the phone line. Abhinash, really appreciate you joining us. An important week, like we've mentioned, with the PMO itself getting involved in reforms for the sugar industry. We're talking about, removing that cap from exports. We're talking about even perhaps an MSP hike. So let's understand, currently, what's the situation in terms of demand supply for the sugar industry? What's the size of the club that we are perhaps sitting on?
Thanks a lot for having me on ET Now. As on the 1st of October 2020, the start of the next sugar season, we expect to start with a high opening balance of around 10.5 million tons of sugar. That is number one. Number two is we are going to produce a very high sugar production again next year of almost about 30.5 million tons. Whereas our domestic requirement will be about 26 million tons. So if you deduct 30.5 minus 26, we will be adding 4.5 million tons to the opening stocks of 10.5 million tons. Unless we export a part of that and divert some into making of ethanol.
Okay. So how is the pricing action right now? Like you mentioned, requirement is not as much and the production season as well looks very strong. What sort of pricing are you witnessing? Because the other big point that's being mooted is in discussion is a hike in MSP.
Yes, we have been requesting the government that the whole purpose of having a minimum sugar price was to cover our costs. And therefore, initially in June 2018, the government had fixed the MSP at 29 rupees and then later on increased it to 31 rupees in February 2019. Since February 2019, we have been requesting the government that, look here, this is not enough. It does not cover our costs because they had missed out on a very important part of our cost of production, which was on account of the interest on the term loans as well as the repair and maintenance of our machineries and plant on account of depreciation, etc. And therefore, we believe that the group of ministers chaired by Mr. Amit Shah agreed to our suggestions and had recommended for an increase in the MSP to 33 rupees per kilo, which I believe the cabinet should be taking up very soon and approving that. But to answer your question, the current ex-mill prices are hovering around 32.5 to 33.5 across the country. Once the MSP is increased to 33, we believe we should be fetching around 34 rupees at our mill gate. Still, we believe that our cost of production would still be higher at about 35, 36, but even at 34 rupees, we should be able to take care of the payment of the farmers. Therefore, it is very important that the government cabinet, the cabinet CCEA, should very, very soon sit down and decide on that 33 rupees of MSP. In fact, the FRP of sugarcane has been increased by a further 10 rupees for the next season. And therefore, we are requesting the government that MSP of 33 may not be enough, and they should increase the MSP of sugar to 34.5 in the next season when the new sugar from the new FRP, which has been increased, comes into the market.
Yes, 33 rupees, that's the expectation that the MSP could be hiked. Abhinash, I hope that we will be able to catch you once again once the cabinet gives the green nod to all of these reforms. Thanks so much for joining in. But with that, we're completely out of time, so we will wrap it up. Thanks for watching.